We are live. This is Magic Mondays. Oh my goodness, forgot what are we talking about today? I'm your host Neil D'Souza, but I'm really thrown off. Hey, Jason, what's going on? You look a little lighter than normal today. No, okay. Obviously, today, guys, I told you guys today, we've got a special guest co-host, and our regular co-host, Jason Vaz, is unavailable today. He's out in the mountains, but today we have a special guest co-host, a good friend of mine, and I'd like to introduce you to Darren Long of Delta Harbor Assets. Darren, how are you doing today?
Doing well, Neil. I appreciate you having me on the show and excited for what we're going to discuss.
Great to have you on. Great to have you on, guys. And as always, you guys know we have the illuminating, not the Illuminati, but the illuminating Marlon Yee man. Marlon, how you doing?
Good, guys. Good. I'm excited for today's topic. Should be very interesting.
Yes. We've got, obviously, today we're going to be talking about precious metals, talking about gold. We'll be getting to that a little bit later on. And we're really excited to talk about this topic and really get Darren's input on that. But before we do, we're going to do what we normally do, which is have our In the News segment. So let's talk about a couple of these things that are going on. Probably the biggest one is, this is summertime, it's COVID, but we're now starting to open things up, and the government is now actually saying, the provincial government is now saying that they're looking to actually do the phase 3 opening earlier than expected. And so this Friday, they're looking to start allowing, a lot more indoor events, indoor dining, indoor parties. You're even going to be allowed to go to a nightclub with up to 250 people. You guys got any thoughts on the reopening plan?
Well, I mean, it's obviously a big economic deal. It's Main Street coming alive and reviving itself, and there's about $100 billion in additional savings on the sidelines. And Canadians, if they've proven nothing else during COVID, they've proven that they have odd appetites for very strange ways of spending money, as is evidenced by the way real estate has gone mental. But I suspect that malls open, conventions open, as you said, Neil. There'll be clubs, pubs. We're going from patios to indoor. Live performances all coming back, and so is commuting to work. So I suspect that there's going to be many returns to a normal for a lot of the segment, especially in the core, where we've left a lot to be desired in terms of what people expect or have hypothesized or estimated the outcomes would be. We were just talking about it before the show, but ultimately I think this is a time in which you're going to see some more boom. You're going to see some more FOMO spending, and you're going to see everybody running out to buy new pants, new shoes, new cars, new everything.
Absolutely. Fear of missing out. I agree. That's going to be a huge thing. Everyone will want to get back into those things that they weren't able to do. Weddings. You're going to be allowed to have an indoor wedding again, and which is amazing. And on the I suppose darker side or unfortunate side for funerals, in a good way, people are actually going to be able to have funerals again indoors and be able to mourn, which is an odd thing, but something that we've never had to experience in our lifetimes, where people have not been able to even go through that mourning process in a normal way. Marlon, what's your thoughts on the reopening happening quicker, phase 3 happening quicker?
Good news. It's great news. Obviously, it's going to be an economic boom, like Darren said. I already feel like there's a strong sense of normalcy. I can tell you, there's already a lot of stuff going on that's phase 3 that's not supposed to be going on. You can see it all over social media, TikTok, Instagram, all that stuff's going on. And there is a lot of pent up money that's been, cheap money that's been put out there, and we're definitely going to see a boost in spending. So it'll be very interesting to see what's going to happen. I'm more excited that the gyms are reopening, to be honest with you. So.
Yeah. I'm sure a lot of people are happy about that too. in other news, Theodore Tugboat will be coming to Kingston from Halifax. And as you guys know, I actually lived in Halifax at one point. Used to take my kids to go see Theodore Tugboat. And so now that he's going to be coming to Kingston, I'm going to take my kids to go see him again. So really excited about that in the news too. Now let's get into it. Let's get into just before we get into talking about gold, Marlon, I know we've got a lot happening in the world of finance. Can you give us Marlon's Mortgage Minute?
Sure thing. I got a couple slides here. Some on mortgage financing and some on real estate. So it's about 8 slides. Wyatt, could we get the first slide up? There's one more just before that one, I believe. There we go. Okay, perfect. So as we've been talking about fixed rates in the mortgage market. There's a lot of chatter that mortgage rates are actually going to go up in the future, sometime maybe next year. So fixed rates are based off the 5-year Canadian bond yield. So I just wanted to show everyone a quick chart. As you can see, from June 11th onwards, there was a big spike in the 5-year Canadian bond yield, which means that probably rates are probably going to be moving sometime in the near future. Having said that, they did kind of fall. This was, based on Friday last week. They did kind of fall a little bit. They're at 0.936, but just an indicator out there. If you're in a variable mortgage or anything like that, and your term is coming to an end within the next year or so, you may want to consider locking into a fixed mortgage. Next slide, Wyatt. So CMHC, which is the government insurer for mortgages, if you're purchasing a home with less than 20%, when COVID came, if your credit score was 600 or less, they had what they call tighter lending regulations. Announced a couple weeks ago. They've now brought back that if your score is 600 or less, that they are reverting back to their original policy, which means you're in the same playing field as everyone else. Probably not much of a game changer for most people, but it is nice to see that CMHC is showing some confidence in the real estate market. Next slide. So this is an interesting study by CMHC, and maybe to what Darren was talking about, there's lots of money out there. Basically, banks have received 59 billion in repayments in their mortgages, meaning people are taking advantage of their prepayment policies on their mortgage. Some lenders allow you to pay up to 20% increase on your mortgage payment or a lump sum payment. So we are seeing some smart Canadians putting money towards their debt, towards their mortgage, a big chunk actually. So that's very interesting to see, and I would welcome anyone that wants to talk about their mortgage and prepayments to give me or any mortgage professional a call. Now is really a good time to pay down your mortgage while rates are still low. Next slide. Interesting topic, mortgage arrears. So we've seen mortgage arrears, meaning people who've missed their mortgage payments or fall behind, fall. Credit unions have the lowest mortgage arrears. And pretty much everyone overall, even mortgage investment corps that do a lot of high-risk private lending, have seen a drop in mortgage arrears. So again, that's kind of a good sign for the recovery, showing that people are able to deal with their payments or finding some way to deal with their payments. But again, that could just be all the extra money floating out there. Time will tell, but it's nice to see that the lending side of things are continuing to strengthen. Next slide. So real estate, since Jason's not here, I thought we'd talk about a couple quick numbers here. June real estate year over year, we all know that 2021's been a busy month. You can see transactions are up 28.5%. Again, lots of money going into real estate, lots of future demand moving to today. With the pandemic coming to an end, we should probably start seeing this cooling off. And with the next slide, I think we'll kind of show that. So seasonally adjusted, this means it's from month to month. So May 21 to June 2021, we've seen a 10% decrease in the number of sales. This can be attributed to 1, buyer fatigue, 2, just going back to a sense of normalcy here. People aren't so much worried about moving out of the city. Maybe their employers are calling them back to work, or maybe people just want to enjoy their summer. Usually spring is the busiest time for real estate, followed by fall, and summer is usually a nice break. So maybe we are seeing some sense of normalcy here, but we are seeing sales fall down about 10% month over month. Next slide. Average selling price, like I said, market's been hot. Year over year, we've seen a 17% in the average home price. Great time to refinance, great time to take some money out of your home, or great time to sell. Next slide. So this is an investment show. We talk about Magic Mondays, so I thought we'd talk about opportunities as a real estate investor. We're seeing the condo market downtown come back, so a lot of money is going back into condos downtown, expecting a sense of normalcy to come back, expecting people to go back to work, expecting the patios, the clubs, all that stuff to reopen. The second opportunity you have as a homeowner to invest is to refinance your mortgage. Many mortgage holders 3 to 4 years ago are in the high 3% rates, 3.6, 3.79. You can refinance this time in the low twos, take some money out, invest it into upgrades, invest into another property, invest it into gold, diversify your portfolio, whatever it may be. But now you should be a good time to consider refinancing, knowing that we know rates are going higher next year, right? For the first time, we kind of have an indication of where rates are going. And lastly, we have reverse mortgages. So these are for clients who are 55 years or older who are looking to take money out of their home. A lot of unfortunately baby boomers suffered losses in their portfolios over COVID, and a lot of retirement plans are focused on income, and some of their income's being reduced. So they may want to consider this option. Parents or other people may want to look at this, grandparents, as a way to kind of finance their living. And that's the Mortgage Minute.
Love it. Wow, Marlon, that was there was a lot of really good information that you just put out there, and I do want to, obviously, guys, I'm your host, Neil D'Souza, also host of the Leadership to Wealth podcast, and normally I like to talk to you guys about investment clues. I'm not going to go into that today because we're going to have Darren talking today about gold, precious metals, and these things really on the investment side. But I do want to point out what something important that Marlon was saying there, with having that extra income now or equity in people's homes. There's really lots of opportunity for people to be able to utilize that in terms of buying secondary properties, because really, if you think about it, just a single extra income property can really make a massive difference for everyone. And so much so that there are companies out there, there are funds out there right now that are actually trying to buy single family homes and add them to their portfolio because they understand that they are, I'm going to say cash cow, but really what they understand is that there is a fixed income portion there that will really help them in their funds going long term for people. So there's a lot more there. I don't want to get too much into that because we want to get into our section here with Darren. But before we do that, our co-host Darren's been fairly quiet today, but we're going to give him a little section here. I don't know what we're going to call it. How about we call it the Golden Touch? How's that name for your segment right now, Darren?
That to me is perfect, Neil. It's an excellent way to introduce it to your viewers, and to say that gold is a golden touch would be falling short on the other metal that I handle on a day-to-day basis with our clients, which is silver. And ultimately, as I was listening to the Mortgage Minute and your updates on investing, I certainly am a proponent of hard assets. There's no two ways to put it. Our entire firm is focused on hard assets. Our expertise lies in gold and silver in particular, but we certainly share your spirited approach towards mortgages and investment properties and things of that nature. I would warn, certainly from our perspective, that we feel that real estate is an excellent place to put capital and to have a long-term hard asset grow in terms of the opportunity to develop maybe raw land or produce income, which is what my focus would be if I'm owning real estate. I certainly think that there has to be a kind of little bit of risk management there, and certainly a little bit of a gauge, so to speak. But as it relates to gold and silver, I think the big key takeaway for people these days, Neil, is that there is very few people right now, because we've had this FOMO attitude towards real estate, which is the fear of missing out. And we've done some crazy things over the last year. And real estate has represented such a large increase in our total GDP, predominantly because a lot of that is coming from fees associated to real estate transactions, which have been, obviously rampant through the roof. But that being said, as that market does come to some type of a peak, and we all hope and experience is meaningful in this sense, because history tells us that there are both soft and hard landings. But we all hope that there is going to be more of a soft landing, an opportunity for people to re-engage with the market that might have sat on the sidelines, but also to look at other types of hard assets. And when we look at gold and silver, we typically think very, very simple things. One, it has a historical track record that has been with us for thousands of years. So it's outlasted every major fiat currency. It's outperformed every major paper fiat currency at some point, including the last few years. And ultimately, it's an asset which is a safe haven, which produces, for me, insurance for your wealth. And when I think of gold and silver, I don't think, well, this is where I want to put all of my wealth, or even perhaps, half of it or 3/4 of it. I might want to piece a small bit away and put it aside into something like gold and silver, because it has a track record. Most people don't realize that during this entire time that I've been in the market, 17 years in gold and silver, that they have averaged over 10 to 12% in most major currencies around the world, certainly in Canadian dollars and US dollars. And on top of that, they've had 4 major peaks, which have produced year-over-year moves in the double digits, which have been as high as, for silver, as high as 75% in a single year. So in the last year or so, silver, as an example, against real estate has performed beautifully. It's been fantastic. I mean, we've never seen anything like this for the people that can have the extra disposable income and put their time into there. It's been ultimately really good for them. But we also have to make certain that as we've made money in those other markets, we're thinking about the practicality of where we have to be in 5 or 10 years. Is it smart for me as a single income person, in my family? Is it smart for me to develop more real estate? Is it smart for me to buy more real estate right now? Or maybe I want to put my eggs in a few different baskets. So when we talk to people, we talk about the need to diversify. It's contrarian thinking, because everybody's thinking, stocks right now have been doing very well, real estate very well, all the traditional markets have been doing very well. But as interest rates start to rise, and as now the threat, which is a real threat of inflation, starts to creep in, we look for other alternatives. And part of that is understanding the nature of gold and silver, when they are good for people, and when they do present as more than just insurance or more than just ways to protect your wealth. And that's why I'm in it, because I will crank up the amount of gold and silver I own on a year-to-year basis when I see these climactic moments that include all these hallmark signs. We might get the ending of one cycle and the beginning of another, like we did in 08, 09. And that's a great opportunity for a person looking to diversify their wealth, to get out of something like real estate and more so into the hard assets of gold and silver and others. But those are moments where we can take away key bits of historical, very repetitive cycles and put them to good use. And I think right now it's very contrarian. It's a very small percentage of people that actually own gold and silver or have any exposure to it, either physical, like we do in the bar and coin form, or paper, but ultimately an opportunity nonetheless for people to look around, take stock.
Darren, let me stop you for a second, because I want to ask you a little. You just gave us a lot there, and I want to I want you to help us in this segment about gold. I want you to be able to help us a little bit understand, because I think for many people, they've probably never even heard of precious metals in terms of as an asset class or in any type of investment portfolio, or how that works in any of that sense. And I think for most people, gold and silver would just be jewelry to them. And so can you explain a little bit about gold and silver? How is it even an investment?
Well, listen, when it comes down to it, ultimately we have what it is basically just bars and coins. So as an investment class, it's categorized under hard assets. And it is not, I'll tell you what it's not. It's not a mining stock. It's not jewelry. It's certainly not an ETF or a futures contract or options on a futures contract. This is the actual physical bars of gold that we put into a vault, that we store on behalf of the client, or that they take home and store themselves. And the challenge which is always faced by people that are getting into the market is it a good time? Is the asset class undervalued, overvalued, or indifferent? And right now, where we stand in terms of that opportunity, it's very undervalued. It's extremely undervalued, both gold and silver. And most analysts that know or understand gold and silver first take the time to spend as much as they can in terms of focus on aligning the I guess the education aspect of it, like you said, Neil, which is that people just don't know enough about it to really go into it and tackle it. But there are firms like ours at Delta Harbor where we actually walk people through the investment, where we make it liquid, help them to understand this is like buying and selling a stock. It's that fast. And in fact, gold and silver happen to be among the most liquid investments in the entire world. They trade in all markets worldwide. So ultimately, just understanding that, one, it's physical. So it's in bar form. We do have coins, but these are not collectible coins. These are bars and pure coins. And two, that it's something that you can take home with you or that you can put into a vault and buy and sell like a stock. Very easy to do, very liquid, and it's had a fantastic track record.
Is there a difference between buying it in the form of a bar? Is there a difference between buying it in the form of a bar or buying it in the form of jewelry?
In terms of the buying it in a bar or jewelry would be not considered an investment. So in terms of purity, you might find similar purity to what we would call investment grade bullion, which is in bar form. Just think of a movie that you've watched where you've seen gold stored in a vault. Those are actually what we deal with our firm. We actually deal with the physical bars that get put into a vault and stored in a vault. And that's what the rest of the world deals with. That's the basic underlying common ground, and jewelry doesn't offer that, and we don't typically get that with ultimately with jewelry. We just get basically something that we can put around our necks, sentimental value, and certainly some cultures do hold it as wealth. But ultimately, if we want the purest form as an investor, somebody who would buy real estate would be wanting to buy bullion, physical gold, physical silver in bar form that can be stored, vaulted, held in your hand. It's tangible and can be bought and sold really quickly. In fact, much quicker than even a house.
Wow. Okay. So you can, if you're looking at it from the investment standpoint, we understand now that buying it in the bullion form, it allows you to actually even buy it quicker, and you can even redeem it or liquidate it even quicker than you could a lot of other assets. Clearly, you can do that quicker than a home or real estate. So now we know that precious metals have a track record. They've been around. You and I have talked about this before, and there's something that I'd even like to lead into, which is that the government sees them as a legitimate asset class, and as such, even allows you to use registered plans, RRSPs, to purchase it.
They are considered by the G20 central bankers as a tier 1 asset. So that means, yes, it can be utilized in a registered account, which means you can put physical gold and silver into TFSAs, RSPs, lifts, RIFs. And for some, that's a very good thing. For some, that's an awesome way to diversify their wealth strategy. They might have real estate because you talk about it a lot, and I understand it. I own it myself, and they might want to offset that with a little bit more diversification. So another tangible hold in your hand asset, but at the same time, take advantage of those umbrellas that have all the beautiful tax benefits. And in the case of the TFSA, obviously capital gains free. So you can put gold and silver into those accounts as well. Our government allows it, and we do it with clients all the time.
Darren, I got two questions, just kind of listening to what you were saying there. Number one, obviously you can buy physical bullion in gold or silver, but Neil also mentioned maybe buying certificates. So I wanted to know what the difference is, buying a certificate versus buying the physical asset. And number two, you also said that gold and silver are highly undervalued right now. What do you see as a catalyst that's going to, bring it to its proper valuation in the future? just for viewers?
So answer one would be very simple. Certificate form, it can be had at banks. Most major lending institutions will issue a certificate saying that you have, 10 ounces of gold in certificate form. It's not physical, but that means you have no way of seeing it. You have no way of holding it. It's not tangible. It's non-transferable, so it can't be passed along to a family member or put as part of your estate planning or will planning. Its buying and selling is limited to the bank hours and to that bank in particular, so it can't be put or taken to another bank and used or sold there. And so most people, for the most part, stop using certificates like bullion certificates from the banks maybe about 10 years ago, 12 years ago, when really it came out that that product was never really purchased by or owned by the bank. It was just a promissory note, and B, on the back of those certificates, it clearly stated that you could transfer those however the bank sees fit. So if you went to conclude your business and wanted your gold, they didn't have to give it to you. They could give you cash instead as an equivalent. So those are kind of gone by the wayside now. They're still out there, but they are not used. If you want to invest in physical gold and silver, we say the purest way to do it is to own it physical. And if you can buy and sell it like a stock, there's no excuses for it. There's no real overhead if you're taking it home. If you're storing it, it's limited to about 1% or less in storage rate for most people. In the registered accounts, I think it's about 1.25% on the storage rate. So it's very, very economical to store the product and have it insured fully. And buying and selling, as I said, happens by phone. So it's very liquid and tends to be the most optimum way if you want to be in that marketplace. Now, in terms of being undervalued, well, silver, as an example, holds more patents pending as a precious metals than any other metal on the face of the earth. And so that's just one way of understanding how widely it's being used right now in industrial applications, and how you can still buy it at a relatively low price. You have gold that's sitting up around $1,800 US on paper, and you have lonely little silver that's sitting at $26 on paper. So a very, very huge difference in the spectrum of values. But basically the four hallmark ways that we attribute value long-term to gold and silver are through what fiat currencies do. So the depreciation of currencies right now is a big topic. The threat of inflation, huge. Geopolitics, what's happening around the world, where is the instability occurring that would cause whole countries to want to buy and own gold. And last but not least, supply and demand, where gold is all the gold ever mined is predominantly above ground, whereas silver, all the silver mined that's been mined is used. It's put into applications. It's in your cell phones, it's in your TVs, electronics, it's in solar technology, batteries, clothing, appliances, cars, water purification. I mean, the list goes on. And as long as that long-term demand is there, despite whatever economic climate we're in, the price for silver and gold over the long term will continue to rise higher and higher into a state of fair pricing, where supply and demand reaches an equilibrium. And we think in gold that's going to be somewhere around the $5,000 to $10,000 mark per ounce, and we think in silver that's somewhere around the $150 to $500 range.
Darren, I love what you're sharing there, and I think for people to understand, gold and silver have always sort of done an accounting where the more dollars we print, the more it costs to buy these. But because we're primarily a real estate show, I have to ask you the question: where does precious metals fit in amongst our real estate investments?
Well, I think what it does, Neil, is basically offer diversification. So if I was going to, and again, the unfortunate side of what's happened in the last 12 months is that we've had a lot of things occur in real estate that have pushed the envelope further than we ever would have anticipated in terms of housing values, in terms of detached housing values, in terms of what we expected to see in suburban areas and rural areas. So a lot of these new hallmark, brand new situations have occurred in real estate. And one thing that it's really certainly brought back into focus is the need to be diversified And by that, I mean, just don't be overbalanced too much in one asset class. I mean, if we look at real estate, it's a little frothy. We do expect, as we were saying earlier in the show, that interest rates are going to traverse higher. The bond market tells us this. This is the insight, and you guys have seen it and talk about it. But ultimately, once those rates start to go higher, that allure of real estate as an investment starts to slow. And right now, the numbers are telling us that's occurring month over month. And I'm sure the quarterly reports, once we get through third quarter, will also show that as well. And then we'll enter into, a time in which people will have to reflect, coming closer to the holiday season, on what's best for their wealth. And so we think of gold and silver as just another added way to balance wealth. If you have real estate and you still have disposable income, and you're among those who really, really do and should have real estate, and you've passed all the major hurdles in terms of the stress tests and all those things, and you're still got money to spend, then gold and silver can be a great way to balance that portfolio. And if we look historically, Neil, in fact, at what gold and silver have done, and we pair it against real estate, stocks, bonds, cash, everything that we could possibly invest in, we'll find that silver and gold quite frequently are the most oppositely correlated asset class on the face of the earth. So you'll have, a downside in the paper markets of stocks, bonds, cash, and you'll have a big upside in precious metals. So ultimately, it's a tool for diversification. And I think for anyone that's looking at that, some of the hallmark things that you want to look at when you're building wealth is how many other people are doing it. Is it the top of a market or the bottom of a market? And we think right now, contrarian investors are really smart and astute investors, especially if they hold gold and silver.
Wow, Darren, we didn't even get to touch on gold and silver versus crypto. We didn't even really get to touch on the new gold rush, but that was a wealth of information, and really appreciate you coming on and filling in for our regular co-host Jason Vaz. And on behalf of Marlon and I, thank you so much for joining us today.
No problem, my pleasure. And sorry I went a little over time, but very enjoyable. And when you've got lots to talk about, it's easy to do.
We'd love to have you back for part 2.
Sure, absolutely. Listen, let's talk more about real estate and what's going on in that world and how gold and silver can fit in nicely.
Love it. Love it. All right, ladies and gentlemen, thank you guys so much for tuning in. This is Neil D'Souza, your host, and Marlon Yee. And on behalf of Jason Vaz, and of course, our special guest co-host, Darren Long from Delta Harbor Assets. We really appreciate you guys and look forward to seeing you again next week here on Magic Mondays. Take care. Have a great day.
Have a good one, guys.